I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, we just got a tweet from the president, and that sent markets soaring.
Because, look, the market, I even said it on air. I said, look, I know the CNBC.com picked it up. Hey, this market is just way too hot ahead of a Fed meeting. And the one thing that could make it so that it was explicable, because it was inexplicable, is the tweet that Trump had, because the biggest worry and why everyone wanted to wait was whether he would meet with Xi at the G20, and he just basically said he's going to. So now, yes, you have to be careful because the Fed meeting could be treacherous. We're up so much, but then you could find out that if Xi's talking to Trump, what that says is maybe things aren't as bad as we thought between the two countries. Not as strained, I think is the word, and it's a game changer.
Well, and yesterday on the show, you said that one of the biggest questions for the Trump presidency right now is the tariff overhang. Is that question now answered?
Well, look, I think that the president is not about trade. The president's about trying to get the Chinese to stop stealing. I mean, I was talking with someone yesterday about why did the Canadians come down so hard on Huawei? They stole the intellectual property from Nortel. So what she has to do, you see he had this, withdrew this petition saying about whether the free market to the WTO, which that was yesterday, really significant. What she has to say is, okay, look, if you catch us doing this, then the tariffs can come right back if they come off. The president's plan is to say, listen, the tariffs are on until you prove that you are good actors. That had been the hardline view, and I think it's still a view. But the fact is that this meeting is very constructive. That would have been our worry. I mean, if there's no meeting, we could have been down 500 points.
And before we got the Trump tweet, the market was already up. I talked to you before we hopped on camera about the market being up about 260.
Yeah, right, and then it was, I think maybe some people knew that there was going to be a change, that could be possible. There were also people who were like Facebook, and that was some positive news. But everything's flying. Like UNH is flying, 3M is flying. Things that have not flown are flying.
Well, do you think
anything China related is flying?
Do you think that had to do, before we got the Trump tweet, do you think that the market was flying because of the Fed drift, as they're calling it?
Yeah, well, I mean, look, I think that the Fed, I said yesterday and wrote yesterday on Real Money, was monitoring. And if they're monitoring, that means that we've got your back. If the employment number is soft, we'll move. That's the next number he has. So, it was kind of, as I said yesterday in Real Money, it's a win-win. We were in that rare period where we would win no matter what. We win if the economy were weak, because then he cuts. Win if the economy was strong, because then we don't need to cut. And that was a very unusual situation.
Now, I want to ask you an investing education question, but I do want to inform our viewers what a Fed drift is really quickly, which is basically when the market goes up on the possibility of the Fed's meeting. That we don't know the outcome yet because that comes out tomorrow, but it's just the possibility that the market likes. Now, Jim, the investing education angle that I want to tackle here is, if I'm an investor and I'm looking at this market and I'm worried about the Fed meeting, them not cutting rates, them possibly hiking rates, which is a very slim possibility, what should I do?
If you're an investor, you can stay the course. I mean, I think that you can trade. You can trim stocks that you don't think are good. Okay, so for instance, on our Actioners video, I'll talk about Palo Alto. I don't think Palo Alto had a great quarter. We were patient, and maybe we have to trim some. So you look at what you had that didn't have a good quarter, of which there weren't many. And, for instance, should we sell Kohl's? If it has a yield with interest rates going down or steadily down, we can justify owning it. Dow, Kohl's, BP, even though I know that they screwed up. Okay, and they did screw up. Well, BP just because it's an oil play. But look at your portfolio, make a judgment about who had a bad first quarter, and sell that stock.
And guys, if you haven't already read it, Helene Meisler had a fantastic column over on Real Money this morning about the Fed. All right, so Jim, I want to switch gears because I want to talk to you about Facebook. Now, you wrote about Facebook this morning over on Real Money.
I think Facebook is, look, I am a cynic, okay? So I try to figure out how Facebook could get out of this jam. And jam being that people think that all they do is sell your privacy, violate your privacy to sell your name, which was their business model. Some people feel it was not, but Congress feels that that's the business model. Well, how about if your business model is also to help the unbanked? Well, that's a very noble thing, of which you can do it in charity as they're doing nonprofit, and you have PayPal to help. I thought they were going to have to buy PayPal to do this. You have MasterCard and Visa. You're disintermediating the companies that take the big costs. You're helping countries that have people in countries that have 48% of countries have a currency that is too volatile to use as a storehouse of value. So this is the storehouse of value. So it's a very positive thing, and it can be used for commerce. So, geez, I think that they can defend themselves by saying, listen, we also did this. David Marcus from PayPal, was PayPal president, is doing this. I can't be cynical about something that helps so many people.
Well, and yesterday over on our Action Alerts Plus Daily Rundown show, you told me that this new Libra cryptocurrency launched by Facebook is anti-Facebook. Now, before the crypto junkies hop on us, I want to ask you, why is that a good thing?
It's not really crypto. That's just something to say. It's blockchain. It's private. You can't crack it. The transactions will be private, and that is anti-Facebook. Anti-Facebook. Now, look, I've never hated Facebook as much as others because if you post, well, you're giving up information. But it's absolutely true that there are many people who didn't know that. So they're good in doing this, and they were bad. And I have said that there was not a lot of moral rectitude there, and I'm not backing away from that.
Guys, Facebook is Real Money Stock of the Day, which means that you can head over to realmoney.com to read more from Jim on Facebook. And Kevin Kern is going to be covering what you need to know about the cryptocurrency that isn't really a cryptocurrency, as you said.
All right.
All right, so Jim, I want to swing back to the markets, because outside of Trump, outside of the Fed, and outside of Facebook, what are you watching in the markets right now?
Right now I'm trying to see if the Dow can hold above 300. I'm watching a lot of stocks that shouldn't be up, okay? So I'm looking at 3M. And I don't think anything happened to 3M. Maybe there's more business with China. Boeing, what is going on there? They got almost no orders and the stock's going up. What is that saying? To me, it says that they're about to get approval. Home Depot all the way up to 207. What does that say? People are betting that this weekend's going to be really good for gardening. And these are very big bets. And I think some of them are going to be wrong. I think the 3M bet's going to be wrong.
All right, Jim, that's all the time that we have for today. Thank you for joining us.
Of course.
And for all of you watching on TheStreet.com or on Facebook, we are now switching over to our Action Alerts Plus Daily Rundown show. You can watch it on ActionAlertsPlus.com. I'm Catherine Ross, and I'll see you tomorrow.